Everyone in Vancouver is staring at the same number right now, 16,917, the number of active listings on the market, the flood. But there's another number buried in a CMHC report that is way more important and nobody's watching it. The number of new homes starting to be built, BC housing starts, down over 40% year over year. New condo starts specifically down almost 60%. Pipeline is empty in the flood you see right now. That is the last wave, not the first. And in 24 months, the Vancouver housing story is going to look completely different because there will be almost nothing left to sell. My name is Dan J. Riley. I sell real estate in Metro Vancouver. I track this market every single day. I read the CMHC reports. I read the developer memos. I watch projects getting canceled or paused across the region. And what I'm about to walk you through is a data story. It's not a prediction. It's not a guarantee. It's what the numbers are actually saying. Here's the mistake almost everyone is making right now. They think the housing story in Vancouver is one number, active listings, but there's actually two supply stories running at the same time. Story one, what is on the market right now? That is 16,900 listings. That's the flood. That's why prices are down. Story two, what is being built to replace it? What is coming into the pipeline? What will hit the market in 2 years, 3 years, 4 years? That is where the second story lives. And that's a story a lot of people aren't talking about because story two is the exact opposite of story one. CMHC releases a housing starts report every month. Housing starts means the number of new homes where the shovels have hit the ground. The most recent report on British Columbia, total housing starts down over 42% from just a year ago. Vancouver CMA specifically, the Metro Vancouver region, even worse. And when you break that down, condo apartment starts, which is the biggest single housing type built here, down almost 60%. Read that again, almost 60% fewer condo projects broke the ground in 1 year. Nothing new is being built at the pace it used to be. Not condos, not townhomes, not detached. Everything is slowing everywhere. So the question is, why? Why did BC developers just stop breaking ground? The answer is not one thing, it's a stack. Number one, pre-sale demand collapsed. Developers need to sell somewhere between 50 and 75% of a project on paper before the bank will finance construction. It is the pre-sale threshold. When buyers stopped pre-buying in 2024 and 2025, every planned project hit that wall. No pre-sales, no financing. No financing, no build. Number two, construction costs are still elevated. Materials, labor, insurance, none of them came back down after the 2022 spike. Building a Vancouver condo in 2026 costs almost double what it used to be in 2019. Number three, land costs. Developers who acquired land in 2021 or 2022 paid peak prices. They cannot lower their sales prices enough to sell without going bankrupt. Number four, development charges and permit delays. Vancouver, Burnaby, Coquitlam all raised development cost charges in the last 2 years. Permitting still takes 18 to 36 months in most jurisdictions and some longer. Number five, interest rates. Even though the Bank of Canada has cut, construction financing rates were painfully high for the last 3 years, and any project couldn't be pre-sold in that window got shelved. Stack all that together, and you get the answer. Developers stopped breaking ground because the math no longer works. Multiple large-scale Metro Vancouver towers have already been canceled or paused. You can look them up. The Vancouver Sun and Business in Vancouver both have running lists. Now here's where it gets interesting. The condos being finished right now were permitted and started in 2022 and 2023. The big construction backlog on the market. Finished towers with too many units. That is a project that started 3 years ago. But what is starting right now is what finishes in 2028, 2029. Nothing is starting. So work the math with me. The current flood of new construction listings clears through 2026 and 2027. The federal bailout is already picking up the worst of the unsold buildings. Buyers who are on the sidelines are starting to move. Then 2028 arrives. The next wave of new completions was supposed to hit, but it doesn't even exist because nothing was permitted in 2025 or 2026. That is a supply cliff. A supply cliff is when new inventory falls off right as demand starts coming back. That is not a soft landing. That is a setup for hard price recovery. Not a guess, it's just the math. Let me walk you through the last time this pattern played out. Between 2018 and 2019, BC housing starts fell over 20%. Vancouver was still processing the fallout from the 2016 foreign buyer tax. Developers were shelving projects and nobody was watching. The media at the time was full of doom. Vancouver was dead. Prices were falling. The market was broken. Sound familiar? Then rates dropped. Rates dropped hard in early 2020, even before the pandemic. Demand came back and there was almost nothing to sell. Between mid-2020 and the end of 2021, Vancouver detached prices ran up over 26%. Condo prices ran up almost the same in 18 months. The people who bought in 2019 during the quiet phase made a decade of equity in less than 2 years. The people who waited for the all clear bought at the top. Almost seems like it's the same pattern every single time. One more, between 2013 and 2015, Vancouver housing starts were relatively soft. not a collapse, but a slowdown. Meanwhile, the foreign buyer window was open, migration to BC was accelerating, and by late 2015 into 2016, Vancouver detached prices went up over 30% in 12 months alone. Why? Because supply could not keep up. There was no new inventory hitting the market fast enough, buyers were fighting over what existed, and the same setup is happening now, except this time, starts are not just soft, they're collapsed, down 42%. Condo starts down almost 60. The setup for the next cycle is far more extreme than any cycle we've ever seen. That should scare you if you own or excite you if you're ready to buy, depending on which side of the market you're on. Let me tell you what a lot of us are seeing on the ground right now. There's a lot of buyers going under contract at 15 to 20% below 2022 peak prices. Some are getting 25% in specific pockets. Assignments on newer builds are trading at massive discounts to the original contract price. These are the deals that a lot of buyers are looking for in every cycle. And here's what buyers on the sidelines are missing. They think we need to wait for the prices to bottom. They think we need the all clear, but there is no bell. There's no announcement. The bottom is a range, not a moment. By the time sales stats confirm the bottom is in, the best deals have already sold. You will be competing against every buyer who is also waiting. Prices might already be 5 to 10% above where they are right now. The window right now is the quiet part of the cycle, as when a lot of the best buyers moved in the past, not because the prices will go lower, because the risk to reward math is finally on their side. Now, if you own, or if you're a landlord thinking about selling, the math is a little bit different. Selling right into this market means you're selling into the flood. You're competing against 16,900 other listings. Days on market are long. Discounts are real. However, the people who can hold through this cycle do have a little bit more of a runway. Supply cliff is coming. Interest rates are dropping. Population growth is going to reset. The bailout put a floor under condo prices. And if you're financially able to wait 24 to 36 months, you will likely sell into a much stronger market. If you cannot wait, price aggressive, it's probably best to get sold now while the current inventory clears. I'm not telling you what to do. I'm just giving you the honest math. Talk to your accountant, talk to your mortgage broker, then make a decision. And here's the last piece. Watch what developers are doing right now, not what they're saying. Multiple large developers in Metro Vancouver are quietly buying up land assemblies at discounted prices, and they're betting on the next cycle. They're locking in future project sites at 2026 prices, not 2022 prices. Watch permit applications. The recent months have shown developers starting to file new applications on projects. That is the leading indicator. Applications go up first, then approvals, then shovels, then completions. That whole cycle takes 3 to 5 years. That's generally what an insider watches, not the current listings, the applications behind them. The retail investor is watching the daily market report. A professional is generally watching CMHC housing starts, CMHC absorption, and city permit filings. Different data, different picture. So here's my read. Everyone is watching the flood. Current flood is real, current pain is real, and prices being down is also real. But there's a drought coming behind it. Pipeline is empty, nothing is starting. The federal bailout is buying up the worst hit inventory. Rates have already cut. Demand is starting to come back on the ground, and starts are collapsed. That's not a crash formula, that is a bottom formation formula. Nobody rings a bell. The best buyers don't wait for the bell. They read the CMHC report, they see the setup, then they move. By the time the news catches up, the deals will already be gone. So here's what to do next. If you're eyeing a specific Vancouver property, you can shoot me a text at 604-288-7592. Send me the address, send me the MLS number. I can pull the comps, I can run the math, and I can tell you straight up whether the deal is worth chasing or not. If you want to see the actual best deals on the market right now, I keep a running list. Every property has been vetted by me. Real motivated sellers, real value. Again, just drop me a quick text message. If you want a one-on-one to walk you through your specific situation, taking all of your numbers into consideration, just book a call in my Calendly link below, 30 minutes, and we can map out your quick note. This video is a general commentary. It's not personalized financial or investment advice. For your specific situation, talk to a licensed professional before you make any move. Thanks for watching, and I'll see you in the next one.